morning. You're watching India Market Open and we're set for an exciting week. Niraj, I would reckon that you are looking at even more positive cues this week than last week, simply because global cues have been good. And I think some of the sideways trade that we saw last week is perhaps out of the system, off the market, the trepidation, the concerns, etc.
Yeah, very likely, Tamanna, because, Friday was a strong close per se. Global markets are looking strong. The tech businesses in the US seem like there is no tomorrow out there. It's quite fascinating, really. But sorry, Tamanna, just off grace before we get to the market per se. For any cricket lover, I get to cricket so many times, because I am. But just, Tamanna, yesterday at the World Cup that is going on, a New Zealand bowler, Lockie Ferguson, bowled 4 overs, the 4 permitted overs. All 4 were maidens. We have had the IPL wherein bowlers are taken to the cleaners, and here we have a bowler coming in and bowling all 4 overs as maidens. 4 overs, 4 maidens, 0 runs given, and 3 wickets taken. What a dream spell, and so heartening to see bowlers getting their due. So I just thought it was fascinating to point that out.
I'm fascinated that you're so excited about it, Niraj. No. Definitely celebrating all achievements. But talking about celebrations, talking about celebrations. No, I wish I could share your enthusiasm, but I was busy snoring while this match was on. But talking about celebrations, the US markets definitely is record highs. Now look at this: 7 out of 8 weeks in the last 8 weeks have seen US markets close up in the green. The Monday trade in US markets seems to continue that trend. So great start to the week as far as Wall Street is concerned. All indices up in the green and at record closes. The Nasdaq, Dow Jones and the S&P 500. You're seeing the Dow futures also at least in positive territory. So now what's happening here? There is sort of a consistency in positive economic data that is coming up, and all eyes will be on more data that comes up through this week, including retail sales, housing data. All of that is going to be on the radar. Like Niraj mentioned, the mega caps and the tech stocks are really pushing this drive, and Apple, Nvidia, the whole host of them are really what's also fueling this rally, which seems like it may sustain. Now, in terms of bond yields, you saw a bit of a positive trend as well. Now, the 10-year at 4.27%, and all eyes really on the Minneapolis Fed chief's comment. So Neil Kashkari, in an interview over the weekend, has said that he thinks there will be one rate cut, and he's indicated that it might come in December. So that tempered all of this enthusiasm for a bit, but not for long. I just want to take you through what's happening with crude as well, and that's interesting because remember, there was important Chinese economic data that came over the weekend, which was negative. Despite that, you saw a bit of a bounce back. Overall, Brent, for example, at about 84. So crude is not really going in any scope, which is painful from an Indian perspective. Bonds are fine. US markets are positive. Asia is opened very, very strong. And I'm just going to pull up the Asian Open for you. The Nikkei 1% up is really rebounding. Shanghai as well. Just that one bit about Chinese data. And I just want to spend a second on it because it's important. Chinese data is showing that economic recovery for China is some time away. Their manufacturing data has come in lesser than what was expected. I don't know if you managed to make those. That is going to continue to be a bit of a concern. But at least not today as far as the Asian markets are concerned. Let me pull up the implied open for you and look at how we are expected to open up, and that's 113 points up. So that's great news as far as India is concerned. And fund flows on Friday's trade. Remember, we're coming back after a long weekend. So we're looking at Friday's fund flow numbers. Showed FIs coming in and buying at about 2,176 crores. So by all parameters, it seems like a good morning. And what a show we have today.
What a show we have today.
Yeah, power-packed.
Yeah, it's power-packed indeed, and a lot of very important things to mention, so which is a great thing. But what a show we had last week, Tamanna. Just want to bring up that aspect. So trade last week, right? Tamanna was talking about how some of the jitters are out of the way. And one of the reasons is this, that for the better part of last week, we were struggling to get over the 23,400 mark. Friday, the Nifty closed above 23,400 after failing in the previous 3 sessions. So it kind of got over a hurdle. Whole of last week, India VIX was down in the red. Each of the 5 days, India VIX corrected, which is a big thing. Volatility being down is a big thing from a bull's perspective. Remember, it's when VIX is way lower is when you actually expect some of this momentum to continue as well. So that is part 2. FPI long-short ratio as of Thursday's close, which is the data that I have, was at 46%. So while they may be, and they've bought into Friday, as Tamanna said, but even if you believe that they've been sellers through and through on the cash side, on the derivative side, they are building on the long positions. So that's the other thing. They are riding this up move, by the way. We may think FIs have missed out, but on the derivative side, FIs are actually riding this up move. And frankly, that's my trade setup, because there are 2 or 3 things that form a part of the trade setup today. One, if you just look at the leaderboard, and the leaderboard was what? Micro caps, small caps, PSUs, defense, real estate. That is what led the leaderboard, which shows that momentum is firmly in place. And while Pharma will see a correction, and Tamanna will speak about it as to why, Pharma is going to be a big loser in the session today, we believe, and we'll come to that as to why, the others are doing very well. So watch out for example, aside of the defense names, etc., and HAL, apparently there is some defense ministry RFQ for some 45,000 crores for helicopters, which will spur HAL. But gas sector stocks could be in focus today. I mean, breakout moves are being seen in IGL, MGL, Petronet, across that board. So that bucket is looking very strong. And last but not the least, Tamanna, what stood out for me on Friday's session was the market telling you that we are betting on growth. We are not betting on value. And why do we say that? Look at the moves in an SKF, in ABB, in Trent, in Varun Beverages. Each of these stocks must be over 70 PE at the very least. In fact, maybe Varun and Trent might be over 100, right? But they have shown growth. They are promising growth. The market is saying we are betting on them. We do not want to go out and buy stocks which are at 6, 7 PE necessarily, because there is value there. The markets may be high, that's okay, but we are betting on growth.
You know, if you're talking about Friday's close, Niraj, I think the big headline, and this is something we're going to focus on today, is what is happening in defense stocks. The comments from the Defense Minister, Rajnath Singh, when he took office again, came in on Thursday evening. But I think you saw run-up on Thursday as well. It took some time for the market to digest it. Yeah. And, I mean, the comments we're showing you right now is, you know, the generic setup kind of comments. But what has really taken the market's attention and the market has taken note of is this 50,000 crore rupee number. So they want to work to increase defense exports to 50,000 crores by 28-29 from the current 21,000 crores. So you're looking at doubling defense exports in the next 5 years. So reminder over here at 8:40, we're going to speak with a company, we're going to speak with an analyst, and we're going to understand how feasible this aim is. But nevertheless, let's just pull up all of those defense counters and what they were doing on Friday trade and what that close looked like, from an HAL to a Cochin to, you know, a HAL. All of them, a BDL, all of them have done very, very well. Cochin Shipyard, they're about 6% up. You had Bharat Dynamic, you know, Paras, that whole lot doing extremely well. Mazgaon, how can I not talk about Mazgaon, Doc? Paras Defense was 20% up. Mazgaon, Doc, was 14% up. So you've had all these sort of runaway gains. But what are you going to see today? Is it more of the same? Are there other cues? And definitely there are some interesting cues to watch out for. A lot has happened over the last 3 days in terms of news flows. And I'll quickly go through the top 2 or 3 which are on my radar. Paytm, Zomato, you should watch out for. So news reports broke out over the weekend that Zomato is speaking to Paytm to acquire their movies and ticketing business. Very soon, both companies came in and clarified that, yes, they were actually talking, and the potential transfer of Paytm's entertainment business is under consideration. This is what Paytm has come and said. They also said that the focus will be on payment and financial services along with digital goods commerce. Any discussions underway are preliminary. Zomato, meanwhile, said they are in discussions with Paytm for this to strengthen their going out business. No binding decision has taken yet. And they are essentially talking. If it does go through, Niraj, I think it's a win-win deal. Paytm needs to, you know, get back to its core and focus on its payment and financial. For Zomato, they are looking for more and more ways to expand I don't know if people who go to buy food will also want to book movie tickets, etc., but they need to move in some direction, and that seems like a good idea.
Yeah, and we now know that while Blinkit was chastised at some point of time in the past when they were not doing well, now people are talking about Blinkit as the big thing. So these guys know, what they are doing over a slightly longer term. They've got great advisors in Sanjeev Bikhchandani being there as well, and in forms of Info Edge. And as long as they execute well, eventually markets might like it.
Blinkit has to improve its quality of what they're giving through. I mean, that story about one of their dark stores being raided in Bangalore and then expired stuff being there.
Yeah.
So they have to keep these things, they have to keep their nose clean when they're under radar. Another company which is under the radar today because of a very unfortunate news report, which is not incorrect because they've come out and clarified, and this was shocking. This is something you pointed out over the weekend, Niraj, and I was completely shocked. Som Distilleries. So it started with this local news report in Madhya Pradesh showing children working at a liquor factory, and there are 58 minors working there. Their hands were burnt because of working in that liquor factory, and it's a contractor for Som Distilleries. So Som Distilleries came out with an explanation. They said that it's their contractor who's been hiring all of this staff, and they are the ones who are responsible. They've now eliminated their services, etc. But I would say do expect some kind of a pain point for them, definitely, for some time at least. The pharma sector is the other one, and the city note on pharma is what I wanted to pull up, and this one's the important one. The average drug prices, and I'm just going to put this in simple terms, and of course we'll play out what the city note is saying, but I'll put this in simple terms. There's been a sharp double-digit decline in the average drug prices in the US between April to June 24, and the data that they pick up is essentially what Mediclaim services there use to determine how much insurance cover people in the US should get. Those are showing a sharp decline in prices. So Aurobindo, Cipla, DRL, Lupin, remember these four names, 80% of their products have seen a double-digit decline in Q1 FY25, according to Citi. Citi is obviously negative on these stocks. The only ones that they find themselves positive with are those who don't have so much of a generic exposure in the US. So Sun Pharma, Torrent Pharma seem okay. Lupin also in that pain point. So they prefer non-heavy, US heavy names like Torrent and Sun Pharma. I think that's going to be a big one. Dr. Reddy is anyway on the quote-unquote hit list of Jeffries as well.
Yeah, and rightly so. The interesting thing is, until about a month and a half or 2 months ago, nobody was talking about the possibility of the pricing pressure. And I think the City note at least speaks about how in the 2.5 month period from mid-April to June, this pricing decline has come in. And somehow, I mean, while Sun may be a non-US heavy name, but very likely that if the whole index is going down because of some of the other heavies, even a Sun, even the CDMO players, which do not have as much of connection per se to this kind of pricing, might see a bit of a corrective move. So watch out for that entire bucket of stocks, as Tamanna pointed out. They could be negative in the session today. So that's one bucket that you certainly watch out for. As a pocket, if there is one sector that will start off lower today, is pharma, quite at the opposite end of defense, really. So that's interesting. Now, 2 or 3 names. HOEC could be interesting. We'll hear from the management at 8:30, by the way, today. But the company says that the export flow line for wells D1 and D2 have been cleaned up and lined up for production. Now, these are 2 wells the company's been working on for a long time. About 9 days ago, it was expected they will give out this announcement. They said that there is some cleanup process that is being done. So the stock corrected a little bit. Now they are saying it's cleaned up, lined up for production, and apparently oil and gas production both move up by about 30 to 35% as a result of these 2 wells coming in stream. Imagine 2 wells coming on stream, upping the production of the company by 30 to 35%. And because it's happening virtually at the start of the year, at the end of the first quarter, if you will, for the next 9 months, the company will probably have the benefit of increased production. Very likely the stock will react positively today. So watch out for this one. Watch out for HFCL too. European Commission has determined that HFCL is not engaged in the dumping of optic fiber cables in European markets. Apparently, as per the HFCL exchange release, provisional anti-dumping duty has been determined on all other Indian optical fiber cable manufacturers except for HFCL. So watch out, HFCL, which was up 5% in Friday's move, could be up today. And, we talk about the other Adani names too, but the other name that stood out for me, and Tamanna, we were talking about this in Friday's closing show, Paras Defense was up 20%. All defense names are exciting. Paras is a particular reason to it. Adia, no less. Abu Dhabi Investment Authority has bought 5.6 lakh shares in Paras at 1120. Mind the way, the stock is up 20%, but it's not far away from the price at which Adia got into Paras Defense. So very likely that the stock might have a continued positive reaction in the session today. And you will hear from the management at 11 a.m. I think today on NDTV Profit. But watch out for Paras. Could be a mover in the session today.
So all defense stocks really will be a mover, but just a few others that have been in the news, and there's so many after a long weekend. But IIFL Finance was one that I was looking at. Their numbers are out, and they have come out with a clarification. You'll also hear from the management today that everything that the RBI wanted of it has now been delivered. They've done a rectification of all RBI statutory guidelines. Remember, they had a question mark coming in on their gold loans and the fair price value that they were giving for their gold loans. They have in great detail explained how they have rectified all of these issues and created a more transparent kind of a system for assessing the fair price value for their gold loans. So you could see a sort of an up move there. We have also been seeing IIFL, just I think earlier last week, IIFL Finance was responding positively, so that could continue. Jubilant Pharma is the other one. Their unit has invested $50 million to add 6 PET radio pharmacies across US, which will be operational by FY28. Might see an up move thanks to that. And TCS, this could see a bit of a negative impact. A Dallas court has held the company liable in case of alleged misappropriation of trade secrets and has asked the company to pay damages and interest worth $194 million. That's about 1,600 crore rupees. So definitely in terms of a sentimental impact on the stock, you might see it negative there. Meanwhile, good news for Wipro. They've got a huge deal as well. So it's positive for Wipro, maybe negative for TCS this morning.
And I think Infosys, some brokerages are positive.
Jefferies has a positive note on Infosys this morning with about a 17% upside. So the big three to watch out for as well.
Yeah, there's also, by the way, the two big names from the Adani group, which will be in focus today, Tamanna. Adani Enterprises, promoters have increased the stake in the company to 73.95 from 71.93. So about 2% increase in the company between September 23 to June 2024. The disclosures came out post-market hours on Friday. So watch out for Adani Enterprises and watch out for Adani Ports. This is from a media article, but the company's apparently gotten a green nod for a 45,000 crore Mundra expansion, the Mundra port that Adani has. They've gotten the green nod for that. Now, why this is important? Because the article says that this may aid the company when the concession period for the port expires and they have to roll it over. So this expansion might cement the case for a further extension of Mundra port operations as well. So watch out for both the Adani twins. Could be active today. Standard disclaimer, the Adani group owns NDTV and you're watching this channel NDTV Profit. So just want to lay out that disclaimer as well. The third big one, in addition to the big ones that Tamanna mentioned, Mahindra and Mahindra. Now, the analyst day happened on Friday. Everybody attended it, and almost everybody's come out with a brokerage note, or every brokerage has come out with a note on the analyst day takeaways as well. I've chosen the Nuvama note, just to mention that. And Nuvama, as have most others, raised the target price as a consolidated piece. Nuvama has raised it to 3,500 versus 2,760 earlier. Some people have other target prices, but I've chosen Nuvama note out here. They have raised the FY25 and 26 EPS by 2% and 6% on virtue of the company's growth aspiration of 15 to 20%. Not too many companies are coming out and saying that we aspire to grow at 20%, by the way, a range of 15 to 20%. But M&M is saying that they will do this while doing a capex of 35,000 crores and retaining 18% ROE. For large capex, ROE maintenance is difficult. M&M is saying they'll maintain that 80% ROE as well. They've planned 22 launches by 2030. Now, Puneet told me that why this is important. Both Puneet and I think Tushar also told me that why this is important. That's because this now brings M&M, when they do all of these launches, across the bouquet of sport utility vehicles, from EVs to ICE engines, and from a high ticket priced EV to a small ticket priced ICE engine as well. So across the bouquet, which is large launches, and the global tractor share, which is 5% now, will be raised via launches and better global reach as well. So they've spoken about a lot of it, spoken about the GEMS portfolio.
The stock already was doing well last week and on Friday as well.
Yes.
So one to look at.
And let's see if it does more.
Just a couple of more before we get to more auto and the exciting Hyundai IPO details. But just a couple of more. One is Bharti Airtel, I thought we should talk about, because I think it's a big deal to prepay 7,900 crores in what you owe the government. And these are deferred liabilities for spectrum, which they acquired in 2012 and 2015. But they had time to pay it. They have prepaid. So their prepaid deferred liabilities could be seen as a positive. And Indigo, they have amended their existing pact with Pratt & Whitney, the affiliate IAE, which will give a compensation to the company on unavailability of engines. Remember, Pratt & Whitney has been the bane of the aviation industry worldwide, globally. Their delays have impacted all sorts of airlines. In fact, Go Air has blamed Pratt & Whitney for the entire aircraft on the airline being grounded. So they're going to get some compensation from IAE, and that should be interesting as well. But the focus on Hyundai.
Yeah, the big one, the biggest IPO in India's history. Alex, what are you bringing us aside of that headline?
Well, it's very interesting because I think my colleagues that are joining me today on Editor's Cut will be doing something that they've never done in their careers. Despite the fact that they've been looking at auto for several years now, they haven't looked at an automotive IPO. Because the last one was 20 years back, Maruti Suzuki. So this is going to be an interesting DRHP to go through at the very least. But before we get into the conversation about what is on the table for the investor, I'm curious what my colleagues have to say about the pronunciation of this car company, because we've all been calling it Hyundai for years. Is it Hyundai?
It depends where you're from. Depends on where you're from.
If you're in South Korea?
If you're in South Korea, maybe you'll say Hyundai.
Yeah, there you go. So, all right. So maybe, just maybe, if we're going to be true to form, we're going to have to practice saying it right. But having said that, what's on offer for the investor? What's the size of the issue?
So, Alex, first of all, thank you for the great opening, so to speak, because yes, it's a landmark moment for the Indian car making space, first car maker. We do not know the size of the IPO so far, but speaking to sources, we came to know that it will rival LIC's from a few years ago. That was a 20,000 crore offering. It will be rivaling that. So essentially, or potentially, it can be the biggest in India's history. In terms of valuation, again, we are getting the sense that it will be about 20 to 30 billion dollars. Again, from sources, not something what the company is claiming, which will actually be half of what the parent is valued in South Korea.
Oh, that's very interesting.
Yeah.
All right. So that's essentially the numbers to watch out for. There is more to talk about, of course, on valuations, because ultimately, where is it being pegged? You have some multiples. Where is it at right now?
So over the weekend, we were having conversations with analysts, how they're seeing the IPO, what are their calculations about how do we arrive at a valuation for such a big company. So what they're saying is, say, for example, if Maruti Suzuki is at 25 times its FY27 P multiples, Hyundai will be around 21 to 22 times FY27 earnings. And at a lower level, it's Mahindra at 16 times. That's the sense we are getting from analysts.
Puneet, you've done some back-of-the-envelope calculations as well. What do those numbers stack up as?
Yeah, essentially just looking at, because we look at Hyundai has a high EBITDA margins compared to something like a Maruti. For this particular year, it was 12.7 versus 11.6% for Maruti.
FY23.
FY20. So this is for 9 months of FY24, and we've just kind of extrapolated it. But when we look at, the profitability Maruti is higher currently. So profitability for Maruti is, of course, when you look at just the percentage to revenue, it's at roughly 9% versus 8% of something like a Hyundai. And capex also is there. Another thing is one is royalty. Royalty for Hyundai is much lower at 1.6% versus 3%. But when you look at why is Maruti's profitability higher, is based on some ratios which we've done. So when you take a depreciation to the plant, the PPE basically, for Hyundai is higher at roughly 26% versus 17%.
What is PPE?
So when we look at for any automaker, we look at property, plant, and equipment, which is their main capacity. Right. So that is much higher. So Hyundai is effectively depreciating higher, which might lead to lower profitability. We'll see how this goes. Okay. When you look at the other income, that is of course very higher for Maruti, and how a big cash generator it is. And finally on tax as well, Hyundai is currently the tax to profitability ratio (PBT) is roughly at 26% versus something like a 22 for Maruti. So when you look at these three particular ratios, why Maruti's PAT is higher, we can get to know a little sense from that as well. And so is, effectively for this particular piece, when we look at the ROE picture as well, return on equity is surprisingly higher for Hyundai, roughly like 22%.
And so 15%. Therefore the valuations?
So when you look at the valuations, as Tushar highlighted, we don't have the number of the total issue. But when you just extrapolate it on a price to sales multiple, which is for Maruti at 3 times currently, if you see the market cap revenue as the screen shows us that 3.8 currently based on that assumption of $25 billion or 2 lakh crores. But when you take the same multiple and we extrapolate the current numbers, it comes to around the same for both, which is roughly 2 lakh crores. So the whole argument of 25 billion being a very expensive valuation, from the numbers that we've gathered, it doesn't look as expensive as it is. Plus it could, be like we've seen Maruti globally of the parent is 50% higher valued in India. And in this particular valuation, we've seen that Hyundai is currently 50% cheaper to its global parent. So that's a very interesting take to see how this pans out in the next few years.
Perhaps some of that has gone into the numbers that are circulating right now. But as I see it, gentlemen, there are two cases, right? For years, we've been looking at Hyundai as the second largest automotive company in the car space in India, behind Maruti Suzuki, the gap being humongous. The question is, does it stay that way? You're saying that they will.
So, Alex, you have to look at it from 2 points of view. Now that the IPO papers have been filed and a listing is inevitable, so to speak, it will happen in the next 2 months. What Hyundai India now has to do is defend its number 2 position, because you have a Tata Motors snapping at its heels, coming from 5% 5 years ago market share at 14% last year, and Hyundai was at about 14.4%. So with the extra cash that is coming in from the IPO...
Now at 14.6.
No, so... let's talk about what the year that's gone by, FY23, because we don't have numbers for Hyundai as per as DRHP for FY24. Okay. So FY23, Hyundai India at 14.4%, Tata Motors were at 14%. So basically they're equal share. So first, they have to fend off Tata Motors, defend its number 2 position that it has done in the last 10 years, 15 years, what has happened, and then step up exports. And that is where investors should look at. That's where the incremental growth will come in. That is what investors should look at.
But can it do that?
Given the pipeline that it has, for example, there's a Creta EV that's coming out by the end of FY25. There are 4 more electric vehicles that are planned that are going to come in. Yes, the competition is very strong. Tata Motors has a 75% market share, but it's a market share for it to lose, because Mahindra is also coming up with its electric vehicles. Hyundai also is coming up with the Creta, which is again the best-selling compact SUV in India. So there will be, like Tata Motors, it's a market share to lose. How do you consolidate it? It's Tata Motors' game, but to cut into it is much easier for Hyundai or Mahindra.
Last word, it's not going to be very easy. It could change very dramatically, quickly.
Yeah, I think it could change, but in a tough market of last year, when we've seen launches from Mahindra as well as launches from Tata, multiple launches, Hyundai has maintained market share. Now, as per the DRHP, yes, we don't have the FY24 numbers, but the sales number is out, which you mentioned correctly, at 14.6%. That's the same level which they maintained with last year. So I feel like in a difficult market where the launches for Hyundai hasn't been that many, plus, the compact SUV space that we spoke about, the 6 to 9 lakh range, they've had launches of Venue Extra there. So in a tough market where they maintain market share and going forward, we will see more launches. It will be very interesting to see how the market share landscape changes, but the position that they're going into with FY25 is really strong, I feel.
All right. On that note, that brings us to the end of this particular edition of the Editor's Cut, but there's lots to talk about before the start of trade. In the meanwhile, before you come back from the break, hit the comment section and let us know what you think about the Hyundai IPO and how you say Hyundai or Hyundai. We'll be back before you know it.
Shah, a quick look at the implied open before we get to Agam for the FNO setup of the day, and 108 points is what we're looking at. Agam, you're seeing that positive sort of setup for the week as well?
Yes, we have. In fact, what's how things have played out last week is that while we have continued to open up at new life highs every single day, there's been a little bit of selling coming through. So there's consolidation, sure, but with a bias of a positivity coming in. And well, today most likely we're likely to see that come open on the back of the strong global cues. How are things panning out for our own markets? Well, while we continue to edge higher, we haven't seen as much in terms of positions being built. So as you can see, there's very little change in open interest for the Nifty futures, even though the Nifty advanced by another 0.3%. As for the bank Nifty futures, once again, it's nearly the same. We have seen about a 1.6% increase in open interest there as well, even as the index moves and closes above 50,000, which that is a big positive because we've closed above a big psychological number. Moving on, as far as option markets are concerned, again, perhaps on expected lines, a little bit more put writing seen last Friday, given the fact that the Nifty move and edged higher. And based on that, what we are keeping an eye on when it comes to your overall open interest distribution is that we're continuing to see more and more puts being written on the lower end. Provides you with some amount of support at the moment. In the near term, keeping an eye on 23,000 as a near-term support, and of course on the higher end, keeping an eye on 24,000, where you do have a lot of accumulation as far as calls are concerned, as a resistance zone. As far as stocks are concerned, of course, Fin Nifty expiry is today in terms of the weekly options expiry. Watching out for 22,400. That's where you've seen a lot of accumulation. But coming down to stocks, it was a mixed day of trade where we did see longs in something like an ABB and ICICI Prudential. On the other hand, shorts for something like a Parrapur, Chini, Wipro or Muthoot Finance. And among stocks which saw unwinding, again, short covering for JK Cement, GMR Airports and Titan. The big takeaway here is that, well, it was a mixed market on Friday, and that's how it has been throughout the course of the last week. The question really is that does consolidation continue while the market breadth remains positive? That's what a lot of bulls are hoping for at the moment.
Well, let's see if that happens, or do we actually have a bit of an up move as well, Agam? But interesting. Thanks for putting out all of that analysis into perspective. Viewers, today, a slight deviation. We're not getting Agam and his guest on option strategies because there's a very important management conversation that we need to do. Some of you would have heard about this announcement from Hindustan Oil Exploration yesterday that the export flow line for wells D1 and D2 on block B80 have been cleaned up and are now lined up for production. What does this mean for the company? That is what we've gotten the MD of the company, Mr. Ramasamy Jeevanandam, to come and talk to us about. Mr. Jeevanandam, congratulations on this wells starting up production now. Can you just tell us what is the importance of this development, sir? Good morning.
And good morning. Thank you. So we have two wells, D1 and D2 in the B80 block. One well was on production. The second well has some issues. And after the cleaning of the flow line and with the job carried out by backers, now we are adding about additional 1,000 barrel of oil equivalent from D1. So that makes the total field production 2,400 barrels. And that's an impact to us, and this will continue.
Okay. So what does this additional 1,000 barrels mean relative to what was? I mean, how much of a percentage increase in oil as well as gas production happens from both of these wells? I'm presuming both the wells are up for production, right?
Absolutely, you are right. And 500 barrels of oil and about 500 barrels of oil equivalent. That is about 3 MMSCF of gas.
Okay.
From the D1 well alone.
From the D1 well alone?
Yeah.
What about D2, sir?
D2 about 900 barrels of oil and about 500 to 600 barrel of oil equivalent. That is about 4 million standard cubic feet of gas.
No, sorry. And just the final part of my question, which I asked you, what does this mean relative to what was the earlier production? What is the growth?
Yeah, the earlier production was 1,400 barrels. Now we are adding additional 1,000 barrels. That is an increase actually.
Mr. Jeevanandam, very good morning. now that these two blocks have been cleared and you're saying you're adding 1,000 barrels to the already 1,300, 1,400 barrels you're doing, by when do you think this comes on stream?
It is already on stream at the moment. As we speak, we are producing additional volume.
Up to 1,000 barrels?
Yeah, that's right.
Okay. And how do you see this contributing, you would say, to your revenues?
It depends on the oil price. You can multiply it by $80. That would be the revenue-based increase.
Okay. Also, can you tell us about the Dirok production and phase 2 development as well? Can you give us any updates there?
Yeah. Dirok, we are right now doing about 20 million standard cubic feet per day, whereas we can go up to 50 million standard cubic feet per day. Because of the demand constraint, we have to choke back the wells. As we speak, we are doing the workover of 3 wells. First well is on the verge of doing a DST tomorrow. So we will be ready to go up to 70 million cubic feet per day. When the grid gets connected, we should be able to go from 20 to 70.
Mr. Jivanandam, one quick question. Assuming that there is the average selling price of oil and gas might remain steady every quarter, there could be variations, but for sake of simplicity, I'm assuming the average price to be constant in quarter 4, wherein you didn't have this production, versus quarter 1 or quarter 2, wherein you will have this production. Now, with that hypothesis, the numbers that you're telling me lead me to calculate that there could be an uptick of up to 70% for your company in terms of production and thereby revenues as well. Would that be grossly incorrect, or would it be largely in line?
It is too. It's either way we will be wrong. So better not to predict any numbers. But as a reference, you are right. We will be about 50% more.
50%. Yeah, I mean, because the reason I'm curious to know this, sir, is that because it's a complex math, but your investors might be wanting to understand the importance of this announcement on the numbers. So as a reference point, while it is better not to put numbers, it could be about 50% more, you are saying.
Yeah, that's right. What I would like to say that the company is in the process of monetizing all the developed, all the proven and the reserves and resources of the company. So we are embarking on 1,000 crore capital program over a period of next 3 years. That's our fundamental basis of strengthening the company. From reference of say 10,000 barrel of oil equivalent, now the gross production, we wanted to ramp up to 25,000 barrel of oil equivalent within 3 years down the line.
Wow. Okay. In which case, sir, my final question to you, and I've gotten the near-term numbers, but if you have these plans in mind, Tamanna asked you a question about the other block as well. Your operating numbers for March FY23, FY24 are circa 300 crores currently, right? 312 crores in March FY23, 308 crores in FY24. At the end of the 3 years, when you say that you will go up to 25,000 versus 10,000 currently, what does your operational EBITDA likely become?
So it should get double. That's it.
It should reach up to 600 crores of EBITDA as an annual number by FY26, if you will, or 27.
That's right.
Okay. Well, we wish you all the best for that and more. Sorry, Tamanna, you had a question? Okay.
Yeah, no, that's fine. Thank you so much, Ramasamy Jivanandam, for joining us today. So HOEC is the big one, and I thought it was interesting, Niraj, because this is a stock that just hasn't moved. Their last quarterly results were dismal. They had a 80% drop, I think, in profits. So let's see if they have, a bump up over here because of this news. So HOEC in focus, but a lot of stocks in focus this morning. And Rajat Bose is joining us for more on this. Sunny Agarwal also with us on the show today, but let me come to Rajat first. Very good morning to you, Rajat. And I think the key input we want from you is, let's start with how you think Nifty and Bank Nifty are going to perform today. Your implied open is showing a very, very positive start. Do you think that's sustaining?
Good morning to you, Tamanna and Niraj. What I would like to say here is that the Nifty for the last 4 sessions were showing a very strange pattern. It opens up, then it goes up further and finally closes near the day's low. Yet, every time it is actually posting a higher close. This suggests that there is some momentum pressure on the upside, so one can expect further upswing, but unless the 9-day exponential moving average, which is currently at 23,172, it needs to move up and it should come near the closes. Otherwise, what will happen is that 9-day exponential moving average will drag this index down to about 23,200 level. But so long as 23,200 is not broken, the bullishness will continue. On the upside, if it were to move above, say, 23,500, then the next target will be 23,737. After that, it will be heading towards 24,100 to about 24,150. The maximum excursion that I expect from the Nifty in this upswing, the intermediate or medium-term upswing, up to 24,500. That is the maximum possible excursion I am looking at. Regarding the Bank Nifty, I would say that Bank Nifty, although it may look bullish or you might feel that it is bullish, but it is actually range bound. And the range is, it needs to take out 50,300 decisively. Only then 51,000 might be retested. Otherwise, only if it were to fall below 49,600, then there would be some amount of some kind of weakness coming in. Otherwise, it will be a buy weakness, sell strength kind of a scenario. But you don't buy weakness or sell strength in the middle of the range. The range is 49,600 to about 50,300.
So, Rajat, good morning, of course. So, while the Nifty may have been, or the index may have been giving interesting, in your words, behavior, specific stocks have had no problem traveling either direction. So, how do you place your bets this morning with an assumption that the index does start off about 100 points higher?
See, I would say that I have chosen some automobile stock and also Escorts Kubota. Escorts Kubota, you know that this is actually on a strong bull run, and that bull run is likely to continue. I would put a stop loss at 42.48, and my targets will be 43.74 and 44.24. It's on a currently, although it has quite overstretched on the upside, but the trend is very strong here. That's why even if it were to come down, unless it closes below 42.48, you will see it bouncing back. And in all likelihood, even 44.24 might well be crossed over the next few trading sessions. That can happen. Next counter that I have chosen for today is TVS Motor. TVS Motor, I need not say much about it because it is already looking quite bullish, and it is giving a signal that there is further upside ahead of TVS Motor. My targets are 25.34. It closed at 24.04 and 25.49, and put a stop loss below 24.88 on closing price basis. TVS is also trending, and it can move up. The probability is pretty high that it will go up.
What about M&M, Rajat, since you mentioned TVS?
Even M&M is also looking pretty good because this is one of the stocks that I found among the automobile stocks that is doing pretty well. And what I could have possibly done is that I could have chosen M&M, but I chose TVS Motor simply because it looks there is a higher probability for maybe TVS Motor, but you know, these are all probabilities. What you said, that is M&M, since it is posting an all-time high, it can also continue to move up. Immediate target is 29.70, 3,000. And if you have to put a stop loss, that stop loss should be below 28.88.
Yeah, M&M stock in focus after their analyst meet. But between TVS and M&M, Rajat's first choice was TVS, considering the run-up in M&M. Let me also welcome Sunny Agarwal, and a quick word with Sunny Agarwal, actually on what our focus is going to be next. Sunny, some of the top movers in Friday's closing session were defense stocks. Would you still be bullish on these counters, and especially HAL?
Yeah, good morning, Tamanna, and thanks for having me on the show. Yeah, definitely. I think with the recent order for light combat aircraft, I think the revenue visibility for HAL continues to remain strong, and we continue to remain bullish on the business. However, post correction to the levels of 4,200 during the post election outcome, we have seen a still swift rally also. So right now trading close to 5,200. I think the fair value of the business is close to 5,500 to 6,000 rupees. So kind of buy on dip is recommended if somebody want to take a medium to long term call on HAL. In addition to that, other few businesses which we like among the defense play is basically Premier Explosive, again kind of play on defense as well as space, a small cap company, very robust order book, sitting on 1,000 crore order book. I think this is one stock which we like from a medium to long term perspective.
Okay, so defense is the focus, and to that end, I want to welcome Amit Anwani. He's research analyst at Prabhudas Lilladher, who tracks the defense space very closely. We also have the opportunity to speak with Mr. S.K. Jha this morning. He's the CMD of Midhani. And we also wanted to talk to you, Mr. Jha, to get a sense of how you are seeing this continued and renewed interest in defense companies from the point of what the defense minister has said. And let me just recap that for our viewers before we move ahead. So on Thursday, while taking charge once again of the defense ministry, the Union Defense Minister Rajnath Singh talked about how the new government will prioritize enhancing national security through modernization of the military and promotion of localization of defense production. The government will work to increase defense exports, and this is the key figure, to 50,000 crores by 28-29 from the current 21,083 crores. He goes on to say the armed forces are being equipped with state-of-the-art weapons and platforms and are ready to face every challenge. Now, my colleague Anushi has pulled up data of what this really could mean, and this I found very interesting. She pulled up the kind of defense exports we've seen over the last few years. And if you look at the jump up already in the last 5 or 6 years, you've gone from about 8,000 crore rupees a year to 21,000 crore rupees a year. The key question that we're placing today to our experts is whether we can really hit that 50,000 crore mark. So Amit Anwani, let me start with you on the basic premise. If I were to pick defense companies which are export facing, and sort of this rising tide has got all boats floating, which would be your top picks?
Right. Thank you. Thanks for having me. So definitely, as you rightly highlighted, that there has been a context set over past 5-7 years, and we can expect the policy continuity. And as far as I recollect, in DAP, DPP, the policies which came in for defense, we were targeting about 35,000 crore kind of export by FY26, and roughly about 1,75,000 crore revenue by domestic defense companies by FY26. So now coming back, I think the export has been predominantly on the supply and component side rather than the platform related things. So I think largely this might be benefiting to many MSME companies, private companies, which have been exporting, and including Paras, Astra, and maybe data patterns in that aspect. So I think there's a few companies, not in my coverage, but I expect basis the defense export boom could be something which could be beneficiary. Now coming back to HAL and other companies, I think the export focus has been largely for HAL on, I think in the first leg on helicopters, because it takes a lot of time to take approvals. It's typically a government-to-government deal, and they have been targeting few geographies. But yes, I believe initially it would be smaller companies would be largely benefiting from the export target, and few of the government companies like Bharat Dynamics who have been targeting exports in the past. Yeah.
Mr. Jha, I want to get your take also on the ambitious target that has been set for the sector. And of course, you're more than welcome to talk about your perspective and from Midhani's perspective, how you see that happening. But defense exports going up to 50,000 crores by 28-29. First of all, do you think that's a feasible target? And are Indian companies poised to make the most of that opportunity?
Yeah, see, first of all, as this analyst has already talked about the long gestation time in putting the defense equipments for the export. It's fact that there's a lot of time is needed for the certification, verification and all. But meanwhile, the work which is started under the leadership of our defense minister, and the way the defense company has progressed, and especially I'm talking about the defense PSUs, and it has given a lot of impact on the defense manufacturing. The defense manufacturing also has gone up exponentially, very high. This year itself, in fact, our export, which has crossed to 21,000 crores, is again almost a 20-25% growth coming from the previous year. And this growth is, as it was told rightly, that we have not got mainly the growth coming in the export from the equipment export. I think those things are also under the pipeline. And India is also looking for exporting the missiles. We are also looking for the exporting our helicopters and aircraft. So many things are on the offing now. And if you see those type of deals and all, it will go further. But it has to be also realized that unless your domestic industry grows, then only you can also do the export. So the main focus by this, the leadership has been to give the emphasis on the indigenization of the defense products. And that is where a lot of work has been done. In fact, I'm just talking about a small initiation which we started earlier. And our export last year was almost 3 times from the previous year. And mainly in the area of all the very special materials. And it took a lot of time for us to get certified by our overseas customers. And now we have made a footprint there. And I'm sure that I'm just talking about Midhani, it can be for other companies also. So once it is certified, your product, you can have a very good market. And I am seeing that growth this year may go again. Maybe we are having a order book coming from the export market of almost 2 to 3 times from the previous years. And this is a very good sign for the defense industry. And since our products are in the area of very high-end materials like titanium alloys, super alloys, then also we have the special steels.
Right.
In fact,
so Mr. Jha, are you saying that just your Midhani's defense book is going to be 2x to 3x this year compared to last year? Did I hear that correctly?
Yeah, we have already that, and there are indications that coming from the international market it is possible to do. So, only the issue today is that how quickly you can execute the orders, because these orders are not going to stay for the long time.
Right.
People are looking for the very quick delivery, and that is where the main challenge lies, that how quickly you are able to get the order and execute very fast. I am talking about in terms of the materials, not in terms of the platforms and all, which takes a lot of time.
Sure.
So that segment is very, very now, like I'll say, a good opportunity in that segment. It is very conducive for the Indian exporter, Indian manufacturer.
What are the geographies? Just give us a sense, Mr. Jha. I'll come to Amit also on this. What are the geographies where Indian defense exporters have, the most upside going forward? Now, we know that some companies, for example, Cochin Shipyard, etc., had cracked, had made headway with the US Navy and that US, UK, I'm assuming would be tougher markets to crack. But from the Indian perspective, which are the geographies that are most lucrative and where you see growth?
Yeah, I'll first talk about the materials itself. materials has no boundary as such, because whatever materials have been used across the European market or the US or even in the now upcoming the Middle East also, these materials are very much required across that region. And once you are talking about the high-end applications going in the aerospace, it is not only the grade, which is basically that your manufacturing capability, your quality management system, the working methods, those things are only in the consideration, and that is where the Indian companies are now getting a lot of advantage, because we are also getting certified by international companies. I think these things are contributing a lot for the exports, and it will have a very strong foundation. It is laying the very strong foundation for the future. And as our Honorable Defense Minister rightly made about the statement that India going to 50,000 crores, I think it is, there's a much more than that also possibility is there.
So that's interesting. You find 50,000 crore rupees also could be a conservative target by 28-29.
It may be on the higher side also, but right now we are targeting that.
Okay.
It can be.
So 50,000 is doable. Amit, just because we're just getting into the pre-open session, so very quickly, I want your specific take on HAL after the 45,000 crore rupee light combat helicopter order that we've heard about just yesterday, and from an export point of view, what would be your top 2 or 3 defense picks even at these levels and valuations?
Right, so HL definitely on a firm footing. So we know there are many platforms after a decade that is on the verge of getting tender out. We are talking about 130,000 crore pipeline for helicopter orders, and at least 60 to 70,000 orders on aircrafts. So the pipeline is massive. The company is talking about at least 120,000 closing order book by FY25 from current 95,000. And I think for the whole decade, seeing the delivery schedule on helicopters and LCAs, the top line can grow at more than 12-13% for this decade. So definitely long-term positive, and we are seeing we are very urgently in the need of many replacements in aircraft side and helicopter side. So definitely HAL being a sole producer would be at the center of it. So we're long-term positive. The current valuations at 40-42x on my FY26 numbers are slight discomforting, but definitely the defense as a whole and HL is a long-term positive bet. Now coming back to export, if you see in the previous platforms, we have seen the offset clause, which many global OEMs has been offsetting in India as good as 30%. So I think what we might be looking for is being a part of the global vendor supplier base with respect to export rather than platforms which is highly technologically oriented. So I think as I highlighted to you earlier, there are a few companies on MSME and private sector which has the great potential with respect to becoming the global vendor to many defense companies, so including Data Patterns, Astra Microwave, and few other companies who are focusing on export. Coming back to even Bharat Electronics, which can focus on increasing exports going forward. Now coming to HL, I think the export focus would be largely to few neighboring countries, and they have been talking to Indonesia, Philippines, and few other countries for platform exports. So they might continue to target that. And I think first level would be helicopter, where the time to conclude or get orders might be slightly lesser than the aircraft like LCA. So I think though it is a bit longer for HL to get any large export order, but I think this would be the focus for HL.
Yeah, no, absolutely. And the fact that they are, now have a proven track record in terms of domestic defense manufacturing, which, like Mr. Jha said, is the first step, right? You bump up domestic defense manufacturing and then the exports follow. Thank you so much, Amit and Mr. Jha, for speaking with us. We've just hit the pre-open session, so we'll have to wrap it up here. Just a few movers and shakers. HAL, since we've been talking about 9% up in the pre-open session. Paytm in focus, 10% upper socket. We talked about Zomato interested in buying their ticketing and entertainment division. Zomato also 1% up, but it's the buyee who is looking good this morning in terms of Paytm. Bharti Airtel is the other one that I just wanted to bring to your notice. About 4% up now on Bharti Airtel as I see it. Remember, they're prepaying their spectrum dues, and that is being seen definitely as a positive. So these are some of the ones that we're spotting. Indus Towers having a bit of a pain, 3% down. RK Forging also in a bit of a pain. But we should actually look at the pharmaceutical pack and see what's happening with the Dr. Reddy's, what's happening with this whole group of companies, Lupin, etc. Lupin's doing okay. Dr. Reddy's, no movement yet after that Citi note, which was quite astonishing, talking about how they're going to have a bad time.
Yeah, and I think Varsha will, in just moments from now, come in and talk about it. But some other stocks, and we'll, of course, mark all of these at the end of the pre-open session. But watch out for HFCL, HOEC, and SOM Distilleries, amongst others, could be very interesting names to watch out for. HFCL, maybe up another 5%. HOEC, another 5% maybe. And SOM could be down about 5% in trade. So watch out for each of these, maybe not 5% as of now. Let's wait and watch if this corrects further. Okay, what about stocks which have done very well in the last week? And Friday, Sunny Agrawal saw some of these capex related names do very well. ABB was up about 6%, SKF was up 12%, some of the others rallied as well. Now these are very well priced stocks. Would you go out and buy them now? Or if somebody has them in the portfolio, would you recommend booking some profits there?
Yeah, Niraj, I think very strong tailwind for all these CapEx-based stories. But however, the valuation is something which doesn't give comfort to invest at the current level. Obviously, if somebody is holding on to all these names, especially the multi-MNC names like ABB, Siemens, SKF. We all know that growth is pretty robust over the next 2 to 3 years, but valuation is something which doesn't give us comfort. So in fact, if somebody is holding from a lower level, it is recommended to book the profit, at least partial profit in all these names, and maybe buy on dip is the right strategy if somebody want to go into this CapEx-based stories. However, one story where I feel there is still a lot of steam left is ethanol-based CapEx story. So Praj Industries, we have already seen a strong up move post election outcome. But however, I feel the way government is planning to increase the blending ratio from current 15% to 20% over the next 1.5 year, 2 year. I think ultimately the key beneficiary will be sugar companies and ethanol machinery supplier like Praj. And so Praj is something which we like and again can be added on deep for a medium to long term perspective.
Well, certainly has had a good move, Praj Industries. Let's see if that continues to do well. The other is, the two Adani twins on the index, which is Adani Ports and Adani Enterprises. Adani Enterprises, promoters have increased stake by 2% in the last 6 months. Adani Ports has gotten a green nod, apparently, to expand Mundra capacity by a bit. Now, these are in derivative space, and therefore, Rajat, would love to understand your view here. Would you trade either of them? Standard disclaimers, of course, viewers. The Adani Group owns NDTV. You're watching this on NDTV Profit. Rajat, over to you.
You are asking me?
Yes, Rajat. Adani Enterprises and Adani Ports.
Well, Adani Ports, at the moment, Adani Ports is moving a bit sideways, except for the excursion on the upside, and then there was a big fall. But it is in the middle, 1427 now. Only thing is that world over, there is a port congestion, especially in Singapore, there is major problem. Suez Canal route and other things. So immediately, if one looks at for this, that you may see that Adani Port will continue to remain a range bound. But if you ask me, if I were to buy a port stock, of course, there is very little choice available. Adani Port definitely is a good long-term bet in my view, from fundamental angle as well as from the technical angle. So Adani Port, I am quite bullish. Regarding Adani Enterprise, I would say that this is the flagship stock of the group, and this needs to take out a particular level, that is 3,400. If I may refer you back to the pre-election results, there was a bullish pattern that showed that there would be a jump up because there was a long white candle and followed by 5 small candle on the downside. Then it crossed to 3,400, only to stay for one day, and after that it failed, and it is not yet crossing that level. Once it crosses that level, that is 3,400, you will see Adani Enterprise gaining traction. But there is every possibility because that level of 3,400 has been tested 4 times in the last few months. So there is every likelihood that it could move up from here.
Okay. Now let's focus on some brokerage notes. You can argue that it's actually a development on which brokerages have given a comment, but we are using the brokerage route as a way to tell this to you, and Varsha Johnson to speak about that. Varsha, not technically just the top brokerage call, but yes, lay out what's happened and what is it that brokerages are saying.
So yeah, Niraj, so if you see, the focus here is the US pricing. The pricing erosion that we have seen in US, this was expected to improve, but the data shows otherwise. Just a little bit background over here. We have all seen pharma companies posting good results due to Revlimid, good sales in Revlimid, which is a cancer product, and easing pricing pressure in US. Even companies were expecting benign pricing erosion going forward, but now scenario has been changed and NADC trends has advised caution. Now latest pricing trends show a sharp double-digit decline in April to June, while NADC, which calculates the average price that pharmacies pay for prescription drugs. Now, according to that data, 80% of the products are seeing double-digit Q-on-Q decline in Q1 FY25. If you see, the average drug prices in June 24 is indicating 20% quarter-on-quarter decline for Dr. Reddy's, which contributes almost 46% revenue to US, while 14% quarter-on-quarter decline for Aurobindo, which contributes almost 47%. Now, going ahead, if the generic pricing trends for NADAC start reflecting in the numbers, there's a possibility that margins may start softening. Let's see what brokerages are saying. Citi has sell rating for Dr. Reddy's with target price, which implies downside of 14.5%, while Jefferies has rated underperform to Dr. Reddy's with target price implying 18% downside, and they are also expecting impact of loss in market share to decline in H1 FY25, while Citi has maintained sell for Aurobindo Pharma with a target price which implies downside of almost 17.3%, while Aurobindo has the highest exposure of US generics among the Indian pharma companies, and going ahead, if this generic pricing trends start reflecting, then Aurobindo may see margin contraction. So this is all we have on pharma companies.
All right, thank you so much for that, Varsha. They also mentioned that relatively Sun and Torrent look like a decent pick because they don't have that much of exposure to a US generic market. Sunny Agarwal, just wanted your take on the kind of slide and very sharp slide in retail prices in the US that have been seen, and does that then over the medium term put a sort of cloud on the pharma pack?
Yeah, definitely. I mean, the majority of the revenue for larger players like Sun Pharma, Lupin comes from the US, and it's one of the most lucrative market. And in case there is a price erosion in the US market, definitely that will hurt the earnings for all these large pharma players. But let's see, I think we would like to hear more from the management on this price erosion trend, rather than taking a blanket call on exiting the pharma as a stock from the portfolio. Because what I feel that with the markets at the lifetime high, obviously the street is trying to find value in underperforming sectors like pharma, IT, and to some extent FMCG. So I think in terms of valuation, I think there is still a lot of comfort in the defensive name, and would like to hear more from the management on the impact of the recent price correction in the US markets.
Fair enough. And we have reached out to the management of these companies. We hope they do come in and explain their point of view, what's happening. Rajat, I wanted your take on another two set of companies, and I'll get Sunny in also in a bit. We're talking about Paytm and Zomato that are in talks, nothing definitive yet, but in talks to sell off Paytm's movie and ticketing business to Zomato. Now, already we're seeing quite a run-up in the pre-open session, but on the charts, do you like either of them and see a further upside?
Well, regarding Zomato, my view could be predilected because I personally hold Zomato shares in my portfolio. That's a disclosure from my side. Paytm, yes, it is looking better. If it crosses 445, then there is a possibility that it can move up. In the immediate target could be 459 to about 465. But so till such time, it manages to get past 538, where the 200 exponential moving average is located, we cannot be sure about the longevity of this upswing. Regarding Zomato, I would say that initially I was a bit apprehensive in the sense that if Paytm is thoroughly bought over, then I would not really like that and I would have got out of it. But now it is buying only the ticketing app from Paytm. This could be good, but as it is, even though I'm a shareholder, I'm holding it for the longer term. At the moment, Zomato is showing a bit of an distribution pattern, and two moving averages are causing a lot of trouble. That is 20-day and the 9-day moving averages. If these two moving averages are not broken down by the price, then I think you will see some good movement. Zomato needs to take out 190 decisively.
Okay. So Zomato needs to take out 190 decisively. Just a couple of seconds to go. But Rajat, what is your take on HAL? Already run up about 5% in the pre-open session. Would you buy right now?
I wish I were not asked this question because yesterday night I have actually reviewed technically on the monthly charts a lot of companies, especially industries like defense, public sector banks and railway stocks. All are showing parabolic rise on the monthly charts. This is the last phase of the upswing. Either it will be something like SRF. For 2 years, you have seen that it is only range bound, or there will be a serious fall in all of these counters. I cannot give a bullish call on HAL, whatever be the fundamental development. I think everything that could have happened has already been discounted in the prices. Right. It has moved up by 17 times in less than 4 years. How much?
Okay, yeah, it has too much, but never know at times, like it's happened with ABB and some of the others. Maybe too much is not too much at the end of it. We'll get to know. For now, looking very, very strong on the back of that believed order win or an RFQ of nearly 45,000 crores. But here are the markets and how they're starting off. About 83 points higher in the session at the start, about 1/3%. Now this is 23,500. We've now crossed 23,500. A lot of calls around this level. It'll be interesting to see whether we hold this for the better part of the day and what does that do to some of those calls as we close in on the expiry. Well, banks about 1/4%, mid caps and small caps, which are very active in Friday's session. About 1/3%. Nothing too dramatic, really. Small caps, though, 0.75% higher. So clearly, the broader end of the spectrum has a lot to talk. But I'm interested in the large caps today because there are a bunch of newsmakers. Pharma, M&M, the Adani twins, IT. Let's get the heat map up on the screen and show you what's moving and what's not. Okay. On cue, Adani Enterprises, about a couple of percentage points. Promoters increasing stake by 2%. M&M, post the analyst meet, 1.5% higher. Wipro, Tamanna was speaking about the positive news flow on Wipro. That's up about 1%. Adani Ports, gets a green nod, up about 1.25%. Then Infosys on the brokerage notes, up about 1%. What else on the gaining side? Not too much, maybe an ONGC, but the losers. And Pharma is down, TCS is down. Of course, not a lot of those pharma names are a part of the index, so maybe Tamanna will be able to better highlight them. But Dr. Reddy is certainly taking it on the chin as expected, 1.5% lower. TCS on that US lawsuit is down about 1% as well. There's weakness in HDFC Life again. Maruti connects a little bit. Reliance and HDFC Bank, the heavies, which are participating in trade last week, are just about quiet. So on a day when the markets have started off about 0.25%, is the Adani twins, Wipro and Infra, so the IT twins, and Mahindra, which are taking center stage on the gaining side, and Dr. Reddy's on the losing side. Tamanna, we must highlight what's happening at the broader end of the spectrum on the pharma stocks as well. The Oros, Ciplas of the world would be interesting.
Absolutely. They will also see a bit of pain. Maruti perhaps also reacting to the Hyundai IPO news and details. They're going to have company now as a large passenger vehicle maker. But let's pull up the indices first on what's happening on the mid-cap and the small-cap. And this Tuesday morning, the Nifty mid-cap 150 about 0.5% up. The small-cap index, let's pull that up as well, about 1% up. So this is where all the action is. And we'll get to the pharma stocks that Niraj was talking about. But first on my list is Som Distilleries that I wanted to talk about. A shocking story, really, of child labor at one of their MP units. That's talk about 6% down in open trade. Zomato and Paytm are the other two that we wanted to track. And that's a big move for both. But Paytm seems to be more positive right now than Zomato as a possible potential buyer of their ticketing business. HAL in focus, defense is in focus, and HAL, it's nearly a 45 to 50,000 crore rupee order for light combat helicopters from the defense ministry right on the get-go as soon as the new government and the new ministry and the new minister is in. So that is positive, 4.5% up. HOEC, Hindustan Oil, we spoke to the management. Two of their wells which were blocked have been cleaned up. This opens up their export pipeline as well, 5% up on the stock. HFCL, because they've not been indicted in dumping of optic fiber cables, they're the only Indian company not to be. Now on the wall, let's get some of those pharma companies that Niraj was talking about. Whether it's a Cipla, a DRL, of course we saw on the index, but a Lupin, a Cipla is doing okay. Aurobindo I want to see, Torrent, Sun I want to see what's happening with all of them. Sun is doing fine. Remember the City note said that relatively Sun Pharma is okay. They don't have that much of an exposure, but Aurobindo Pharma about 1% down. All in all, not really taking a knock on the chin, Niraj, as per that City note. Dr. Reddy's, remember, has a Jeffries note also, which was a bit bearish on it. But like Sunny was saying, maybe the street also waiting to hear from some of these companies on what is the exact impact as far as they're concerned. So we're not seeing too much of a negative move on pharma companies, despite this being worrisome that their sales prices or their drug prices fall 24% between April and June. But not too bad this morning. The focus, I think, still continues with PSUs, and all of the oil pack is up this morning.
Yeah, you're right. Actually, not too much of a damage. Maybe a good day helping as well, because the top loser on the Nifty 500 is Zydus Life, down just about 2.37%. So not deep gashes. What's done well, aside of the stocks that we already spotted about, Cardin Reach is up 7%. HBL Power is up about 8%. SKF adds another 4.5%. There is Mazgon, of course, we spoke about it, 5.5% higher. Schneider Electric, another 4.5%. So a lot of stocks are flying around, but no double-digit gains either, while there are not too many losses. So that's the long and short of how we've started off thus far. But, yep, defense still in focus. Now, Sunny, we had a very long conversation on defense names at the beginning of the show. If you had to invest into one name, and I haven't mentioned Paras Defense as yet, we should bring that stock up too, and whether the Adya purchase is resulting in any gains for Paras Defense. But Sunny, if you had to bet on one defense name as an investment candidate currently, what would that be?
Niraj, then if I have to invest in the one name, then I would like to go ahead with BEL, Bharat Electronics Limited, large cap company, one of the largest company in the defense space with a robust order book. And I feel the fair value of the business is close to 350-360 rupees with investment horizon of 12 months. So BEL is my pick if somebody want to add a large cap defense name in a medium to long term portfolio.
So defense is still in focus. So are some of the oil stocks. I want to pull up ONGC, HPCL, BPCL as well. Crude continues to be benign overall. And, so they've also come off their initial moves. But Rajat, you talked about the entire PSU pack and HAL very, very clearly before we got into the opening session, saying they've run up too much. What about some of those private defense plays? We spoke with Mishra Dhatu today. We've been talking about Paras. Are you feeling the same kind of concern as far as those are concerned?
Yesterday, I checked perhaps 20 defense stocks. Even I didn't know their names. And I found that they are listed in BSE or NSE because I did a Google search. And my clients are very keen on buying defense stocks. But this defense story is mostly panned out. I'm not saying that there would be a fall immediately. They may not fall till about, say, the budget. But say, look at Paras. Paras was 900 and currently it is 1400. 3 trading stations. Will you buy that? At least I won't buy.
Okay.
Well, it's a fair assessment. I mean, per se, from a perspective of somebody who's looking at charts and having the stock scene run up so much. But it's just crazy what's happening out there to some of these names. Garden Reach is up another 8% as well. So doing really strongly for itself. The other stocks. While I know we've spoken about defense so much and we spoke about Paras Defense technically. Do you have coverage fundamentally on Paras Defense? It's a stock that deserves to be mentioned because it got 20% the other day and 17% today. Sunny Agarwal.
Niraj, sorry to say that we don't have coverage
which
on
is fine.
Paras Defense.
Yeah, which is fine. Just wondering if you did. Fair call. Talking about some of the infra names, the last few days we've seen the airport names starting to perk up, Sunny. There is only one listed name and one indirect name in Adani Enterprises, but GMR Airports, and that stock has gained quite a bit too. So port and airport companies in focus today, Sunny. Do you have coverage? Maybe a GMR Airports?
Niraj, we continue to remain bullish on both these stories, whether it is airports and ports. So what I feel is that with the strong GDP growth and domestic internal consumption, I think both these names, whether it is ports or airports, they are likely to report a healthy set of earning growth over the next 3 to 5 years. And within the port name, we continue to remain bullish on JSW Infra, which is the JSW Group company. So there we have seen a lot of capacity coming, and that will likely to lead to earning expansion. At the same time, the recent announcement by Adani Port of permission to expand capacity at Adani Port, that will also augur well for the company. On airport side, definitely there is only one play, which is GMR Airport. And we continue to remain bullish on GMR Airport, also basically led by the increase in footfall and at the same time monetization of the asset which the company is sitting on. So I think the fair value of the business for GMR Airport is close to 105, 110 rupees. And if somebody is a medium to long-term investor, can definitely look at this business on deep to add in the portfolio.
Bharti Airtel is the other one that I wanted your view on, Rajat. So the news today, and it's quite a positive move in that sense if you see, because they've prepaid their spectrum charges to the tune of about 7,000 crores. Stock's doing okay this morning. And remember, the whole market is not moving in any ferocious move. It's positive, but it's sideways in a sense. How do you look at a Bharti Airtel though?
Bharti Airtel is trending up. Its intermediate trend is up. Its long-term trend is up, as well as the short-term trend, though looks like sideways, but with an upward bias. So Bharti Airtel from the current levels can move up to something like 1457. Once it crosses around 1457, the Bollinger Band is upper Bollinger Band, which is a +2 standard deviation band from the 20-day moving average. Once 1460 is taken out, then there would be further upswing. If anyone is getting into it right now, should put a stop loss below 1415.
So 1415 is the stop loss as far as Bharti Airtel is concerned. Sunny, you are constructive on Bharti Airtel?
Yeah, we continue to remain bullish on the entire telecom sector, and within that, our top pick continue to remain the Bharti Airtel. And the reason being that basically we are seeing a consistent improvement in ARPU led by migration of consumer from 2G and 2G packages to the basically 4G and 5G packages, shift from feature phone to smartphone. And there is a lot of headroom as we listen to the management. They are very bullish that the current ARPU, which is in the band of 170 to 180 rupees, that has gotten potential to go up to 300 rupees over the period of next 3 to 4 years. So I think a good consumption play can be added on VIX in the portfolio.
Okay, that's on Airtel too. But just last couple of questions really before we wrap up. Now the index has flattened out a little bit, I must say. So 23,504, we're just about hanging on to 23,500, and Nifty IT is doing well, but banks are not. So Nifty IT is, by the way, up 0.7%, but banks are sulking a little bit in trade today, and that is possibly the reason why the index is just completely flattened out. So bear that in mind today. Sunny, from a market perspective as well, with the way that we are currently, I've read a couple of notes which have said that now they're recommending taking money off the table, etc., moving into some specific kind of names. We spoke about defense and where you'll put in the money. What is the preferred investment bet currently that you guys have come out with a note with in the last 4 or 5 trading sessions maybe?
Yeah, Niraj, I think henceforth the market will continue to focus on a bottom-up story. The companies which are reporting, which are likely to report kind of 20% plus earning growth over the period of next 2 to 3 years, those are the companies where there is a likelihood of sustaining a slightly premium valuation. And if you look at certain sectors where execution is likely to pick up over the period of next 12 to 24 months, so one of the sector which we like from that perspective is railway wagon sector. So all the companies, whether it is Texmaco, Jupiter Wagon, Titagarh Rail, these are the few companies where we feel there will be a significant ramp up in earning over the period of next 2 to 3 years. In addition to that, a structural steel tube industry, companies like APL Apollo Tube, which is again a proxy play on infrastructure spend in India. There we have seen a massive capacity addition, migration from a commodity product to value-added product, leading to the expansion in EBITDA per ton. So here we feel, so this is the one sector where we are bullish on. And in addition to that, a few individual names. So recently we have seen basically office rental as a segment which has come up. So office has listed, and one of the small company ESG Limited, there we have seen a massive seat addition. So commercial real estate is the one sector which we are bullish on. So net, I feel ultimately the street will hunt for the names where earning growth trajectory will be very robust over the period of next 2 to 3 years, and those are the names where higher valuation will sustain. One more sector where we find there is still a lot of upside left is the two-wheeler automobile sector. So two-wheeler as a sector has seen, after a long time, has seen a very good ramp up in the volume growth, and that will lead to the continuation of earning growth for the entire two-wheeler pack, both on internal combustion engine front and as well as on EV front. So two-wheeler as a sector is also looking good from a medium to long-term perspective.
What about Maruti, Sunny, specifically? We're seeing a bit of pressure in Maruti, and would like your view on M&M as well. And let's put that in the perspective of a big sort of IPO coming in the form of Hyundai. How would you look at these two?
Yeah, so if I have to choose the one name between Maruti and M&M, I think there is still a lot of comfort on M&M. The reason being that we have seen a ramp up in earnings on a sports utility vehicle SUV portfolio, and still continue to trade at a reasonable valuation of 21-22 times of the core automobile as a business. And at the same time, their IT business, which is a tech Mahindra, is likely to turn around this year. So if I have to choose one name on a relative basis, M&M continue to look good as compared to Maruti. We have already seen a significant up move in the Maruti during the last 3 to 4 months. So as and when the Hyundai comes up with an IPO, as we get to know the valuation of Hyundai we may see some rub-off effect on Maruti at that point of time.
Right. All right, we'll take a very short break, but before we go into that break, quick look at what's been happening in the markets, and it's just fascinating. 23,500 breached on the Nifty, and the index sitting pretty and comfortable above. Bank Nifty has reached 50,000 and then sort of retraced, but we are looking at a comfortable market. In fact, the Bank Nifty opened near 50,200. We're taking a very short break, but we're right back, and we're speaking with HUDCO CMD Sanjay Kulshrestha. Remember the mega housing push, one of the first decisions, or in fact the first decision of the cabinet after the new government was formed. What does it mean for HUDCO? How will they execute it? All of that coming up after the break. One of the stocks, or I would say sectors in focus since the last 1 week has definitely been the affordable housing play. This is because one of the first decisions that the Modi 3.0 government has made and its cabinet has made is to build 3 crore homes under the Pradhan Mantri Awas Yojana. Now, the affordable housing play from a market perspective doesn't have too many options in listed companies, but HUDCO, a government-run company in existence since 1970, is definitely one of them. To understand how the Pradhan Mantri Awas Yojana extension actually benefits HUDCO, I'm joined now by Sanjay Kulshrestha, Chairman and Managing Director. Mr. Kulshrestha, very good morning and thank you for speaking with us here at NDTV Profit. So let's begin with the basics. 3 crore homes over the next 5 years. One assumes, not all in one go. What is HUDCO's exposure to the Pradhan Mantri Awas Yojana?
See, let me start from the Prime Minister Awas Yojana 2014-15, which was launched by the Government of India. And it has spurred a lot of growth, not only to the housing sector, but it's towards the total infrastructure development sector. So HUDCO is a company which has been financing the infrastructure, including housing. We are also into the consultancy, and we are supporting the Government of India initiatives in terms of the appraisal systems, in terms of the impact assessments also. At the same time, we are extending the financial support, a counterpart funding to the state governments. During last program also, we had been working in tandem with the government as advised from time to time, and we had catered so many responsibilities, including the lending and the consultancy. And I am sure with this 3 crores household, which is, I think, the most prioritized sector, which as per the government, and they had taken a decision for implementing such huge program, which has seen his success during past 7-8 years. I think the household means it is the epicenter of the inclusive infrastructure development, and every development will start from the housing, including the employment. So I think this is one of the finest and biggest program of Government of India, and HUDCO will be happy, and it will be the biggest beneficiary out of this program, because all the infrastructure development and everything, including cement, steel, employment, and everything which is associated with the HUDCO business will be stay connected with this program.
Right. Mr. Kulshrestha, you spoke about the entire scheme right from 2014. So let me also go back to 2014. How many houses has HUDCO built so far in this new leg of 3 crore houses that have been announced? How many will you build, and what will be the extent of your participation?
Yeah, actually, HUDCO is not an implementing agency. HUDCO is extending lending. It's an NBFC which extends the. And in this program, most of the component is being extended by the government. So whatever counterpart is required by the state government, we are supplementing that efforts. At the same time, we are extending consultancy and the capacity building to the state government and its entities. So during last programs, we had supported around five states and extended around 15,000 crores of the loan amount, and we had supported with so many impact assessments and the DPR assessments for Government of India. At the same time, we had also supported in CLSS, which is an interest subvention scheme for middle class households, and we had extended around 2,600 crores against the last schemes.
And in this term, in the next 5 years, the 3 crore houses that we're talking about, what is the extent of participation that you will have in terms of number of states? Do you have visibility on that? Have those conversations started? Or we will see realization coming in a few months? Because right now it's just a cabinet announcement, right? I'm trying to understand how this trickles down for you.
I think it will be a very big opportunity for HUDCO, and since we are participating in the business and we have offices across the entire country. We have around 22 regional offices which are working hand in glove with the state government. And we had already started discussing. And since we extend the loan, which is a long term at a very competitive pricing, states has shown interest to take. So once the schemes are sanctioned by the central government, then the counterpart will start flowing towards the state government. But states are very, very enthusiastic about these schemes, and were waiting for this scheme, since we are talking and discussing about this scheme from last 3-4 months, since the time Honorable Finance Minister has declared in her budget in February this year.
So now you are dealing with 5 states. Does that number increase, Mr. Kulshrestha, or the exposure remains to these 5 states?
Definitely, it will be. I think it will be exponentially increased, because initially we had supported only 5 states, and now I think it will be between 15 to 20 states.
Oh, so are you in conversation with 15 to 20 state governments right now?
That's true. We are in conversation, and we are being associated from the concept, from the need assessments, from the DPR preparations, and we are supporting as a consultancy also to them.
Okay. So now, as we talk about these 3 crore houses, what do you see as the contribution to your book? Can you give us some assessment over there and, the impact on growth? Like you said, it's a huge opportunity. You're speaking to 15 to 20 states as well, so you're going to see that number go up. But if you can give us a little bit of specifics.
If I go back during last financial year, we had raised our loan book by 15%. So it has raised from 80,000 odd crores to 92,000 crores. We had set a 2 financial year up by 26. The loan book should be at 1.5 lakh crores, which I see in present opportunities and the declaration of the Government of India is a bit conservative. But we will retain our 1.5 lakh crores target for next 2 financial years, and I am sure that we will be achieving this 1.5 lakh crores, and which has a CAGR of between 20 to 25%. So as per the economics, also if I add the inflation and the growth rate plus 3-4% plus, so we will be achieving around 20 to 25% for initial years, and by 2030 we had kept our loan book target at around 3 lakh crores. So with these kinds of push from the Government of India, the kind of dividend that the RBI is extending, and the deficits, foreign currency deficits are reducing, and I think it is a very, very achievable figures, and we will take a review in next financial year at what kind of targets has to be reviewed.
Where is your loan book going in FY25, Mr. Kulshrestha?
In FY25, definitely, if the CAGR will be kept around 32 to 25%, we will be around 1.15 to 1.2 lakh crores.
1.2 to 1.5 lakh crores. Okay.
1.15 to 1.2 lakh.
Okay, up to 1.2 lakh crores for FY25 is your loan book. Give us an idea of the asset quality. When you're talking about this addition to your loan book, what has been the asset quality so far? What has been the experience over there?
During last financial year, we had taken a lot of initiatives, and now our net NPA is only 0.36%, which is, I think, is the best in the industry. Last year it was 0.52%, so we had reduced from 0.52% to 0.36%. At the same time, we are reducing our gross NPA from 3.4% to 2.71%. And next 2 years will be the years for the resolution of all the stress assets. And we have around 2,600 crores of the stress assets, which are credit impaired assets. So around 1,400 crores are under different levels of resolution at NCLT level. So I'm sure during this financial year, they will be sorted out. We are parallelly taking an action and revising our one-time settlement policies also, so that whatever assets needs to be resolved, we are identifying those things and making very, very time-bound action plans and taking the approval of the boards also within the framework which is given by us, given by RBI.
Mr. Kulshrestha, good morning, Niraj here. This loan growth, whether it is, in a particular year, it could be slightly less than mid-teens, slightly above mid-teens, be that as it may. But do you reckon that on a sustainable basis, this number for such a long period of time is predictable, part one? And could such predictable loan growth, part two of my question, happen largely with asset qualities maintained, or is that part of the picture a bit unpredictable, sir?
See, we are taking around 20 to 25% growth rate for initially 1 to 2 years only. Then we are moderating it to between 15 to 20%. So with the kind of opportunities available and with the push of the government of India towards the infrastructure, I think it is quite an achievable task to achieve 3 lakh crores by 2030. At the same time, we are funding to only state government and state government entities presently. And our asset quality is very, very strong. So there is no new NPA, and we had corrected on the figures of the stage 2 also during last year. And I don't see that anything will go bad for the company, because we are working in tandem with the state governments, and our monitoring system is very, very strong. And I don't see anything going wrong on that. At the same time, we are continuously working at how to enhance and penetrate into the infrastructure business side and include other players also. And to start with, we are discussing some business models of the PPP, or where the regulated cash flows are available. So I don't think this achieving 3 lakh crores of the loan book by 2030 and 1.5 lakh crores loan book by 2026 will be a very big task for the company.
Could it also be that you are currently thinking of under-promising and over-delivering, because the opportunity size is large, as you said?
We had not achieved a lot of things during 5 years. Let me accept that, and there is a lot of good things. Financial ratios are very good. Our debt equity ratio is only 4. Our CRAR is much more than the required as per the regulations. So we have to work hard, and a lot of opportunities are there. So I think that all these opportunities has to be leveraged. And since we are 75% owned by the government, so we have to undertake that responsibility. And recently we had conferred with the Navratna also, which is giving an additional responsibility to HOEC.
What does that mean for you in terms of your balance sheet, or what does it mean financially to be conferred with Navratna status, Mr. Kulshrestha?
There are very few companies which are Navratna or Maharatna. This is a recognition by the government of India. If you achieve certain parameters in, say, growth rate, then the turnovers and the profit continuously and sustainably, then the government of India identify you and conferred with Navratna. And it gives a lot of operational and the financial independence to the board. So,
cost of finance, etc., does it help you in any way?
It gives a more brand kind of structure to the international investors that yes, this is a company which has been recognized by the government of India. So last year also, if you can see that we had continuously lowering our cost of fund. Last year we had lowered from 7.1%. From 7.46% to 7.1%. So we had reduced our cost of fund by 36 basis points, irrespective the markets were high. So all these things, all these recognitions are indirectly converted into the operations and the reduction of the cost of funds. At the same time, taking the visibility forward, we get the business also.
Okay, thank you so much, Mr. Kulshrestha, for speaking with us. That was the CMD of HUTCO, talking about how this Pradhan Mantri Awas Yojana being pushed forward once again. 3 crore houses will be built. One of the first cabinet decisions made by the new government will help the company and give it exponential growth. With 5 states right now, they're talking to 15 to 20. So that's the big headline out of that interview. We'll take a very quick break. On the other side, we're speaking with IIFL Finance's Kapish Jain. Stay tuned.
Hello and welcome. You're watching NDTV Profit. I'm Harsh Saita and we have with us the management of IIFL Finance. Now the company in focus largely on the back of Q4 numbers, but to try and break down, of course, the Q4 numbers, but along with it, the RBI embargo as well, because that's the critical piece of the puzzle that needs to get solved for this company. So to try and get more perspective, let me welcome quickly on board Mr. Kapish Jain, who's the CFO at IIFL Finance, to talk to us about all of this and more. Welcome firstly, Kapish. It's good having you.
Thank you very much. It's a pleasure being with you.
Right. Kapish, first talk to us about the Q4 numbers. Let's try and break those down a little bit. there's a 200 crore one-time write-off which has been taken, not on the provision side, it's routed through fair value through the P&L account. So talk to us about that. What has caused that dent, and that number, is it a one-off or what is it?
So Harsh, actually, in our endeavor to clean our corporate CRE portfolio, you notice it's significantly come down, almost like 40-50% from Q3 to Q4. It was an AIF investment. This AIF investment has been dismantled, and in an in-specie distribution, we got the assets back on our portfolio, and therefore the fair value had to be reversed. And then we have sold it to an ARC. So as of 31st of March, we don't have any AIF portfolio except for a 5 crore investment, which has been fully provided as per the requirement of RBI. So in the unfolding of that AIF and then selling it to an ARC, the fair value which was accrued in that AIF had to be reversed, and that has caused that debit of fair value coming in. Principally, the sale has happened at par, so it is just an accounting movement between fair value to the provision line. So one has the debit, another has the credit.
Understood. Okay. And what about the CRE book? Is that a one-off, or is that something that will probably continue to spill over?
No. So CRE book is now, it was, if you remember, it was at 4,700 at its peak, around 4-5 years' time. Now it is almost like close to 25-30% of that value. So it's almost like something that is not too prominent for us.
Sure.
The objective was to release the balance sheet from that. I don't think anything immediate coming any further there. This particular book that we hold today is going to run down in its normal course. Now a majority of it is coming from our housing finance company, which is going to build a different kind of a CRE portfolio, a much smaller ticket size, more towards affordable construction-linked funding. So that's the way the dynamics of this asset is going to change. But it'll still be then a very small proportion. We don't see any further one big-time transaction like the one that we did in Q4.
Yeah, that's interesting because your construction portfolio has shrunk dramatically, currently at around 2% of your book. You expect that to start to creep up, or you expect that to be in the sub 5% range? Because
it would be in the sub 5%. It would be in the sub 5%.
Understood. Okay. And just with regard to asset quality as well, we've seen an inch up in your NPA ratios. Talk us through where is the stress that you're currently seeing?
So, the inch up actually, while there is an inch up and you see that there's a gold NPA, a very unlikely thing which has gone up. Now it is more because got to do that there is an RBI embargo. In a normal course, the customer comes in and I do a rollover of those cases. There's adequate security available in the gold portfolio. The LTV almost in the range of around 65-70%. And gold price going up has also helped. But given that I'm not in a position to roll over because RBI has put an embargo that I can't disburse, some of those cases had spilled. But then we don't have any worry here because these assets would be recouped through auctions or through a BT out to another firm. So it's just a momentary thing which has happened, which has caused a marginal up in our NPA. Otherwise, the numbers are fairly fine. We don't have any worry there. And we have adequate security in place for us.
Understood. So, Kapish, just out of curiosity, what are you doing with customers who are coming in to roll over these loans? Because you're not allowed to roll them over. Of course, your NPA ratios may get impacted, but the realizations, my understanding, and the way gold prices have gone, the value you will likely more than make up is the assumption I'm making. But it harms the customer, right? So from a customer standpoint, could you give us perspective as to what's happening?
These are very loyal customers. They have been with us across cycles. They are tuned to the way we have been servicing them in a very customized manner. So they are sticky customer. Given that I have a limitation that I cannot roll over these cases, we try to handhold them to see where I can find exit for them. And there are enough and more players who are happy to take good customers with a good security anyway available to them. So these customers then gradually get exited to another company or another financer, unless they can just fund themselves out by putting their own money.
Understood.
Like in the business, there's a balance transfer. It goes on the same way.
Understood. And do you therefore run the risk of losing these customers, or do you believe that you'll be able to retain them?
I think it's momentary. I think it's momentary because the loyalty has been built over the years, and it's a relationship which has been built. So I think it's momentary. As the sooner the embargo goes away, the team is all geared up, the team is ready, and we should be able to get back these customers.
Sure. Let me continue to focus on Q4. The embargo came in start of March. What's the impact been on growth? Because your sequential growth of 2% QOQ is what I was really looking at. Has come in quite lower than what one would expect from the size of your book.
Correct. So you're absolutely right. The March is 1 month where people really push the pedal for a growth, for disbursement numbers to spike, for a lot of offers available in the market across competition to customers. And you've seen in the NBFC space, largely March plays a very significant role for a business built up. Given there was an embargo to our prominent business of gold, we could not disburse, and that book actually ran down. And that caused that blip coming into our growth. As long as the embargo continues, this book will continue to shrink. And while other businesses would support, but given that the permanent book in the parent companies is coming down, the growth to that extent will get impacted.
Thanks for tuning into this broadcast. In moments from now, we'll of course start talking point. But before we kickstart that conversation, there's a new kid on the block getting listed today. Large Avenues Technology, Ixigo. 34 seconds left. Remember, 740 crore IPO was subscribed about 98.3 times. So in the subscription parlance, was subscribed very heavily. The question is, can it really show that kind of a performance on listing? I guess it's a good day to choose to pick up, to get listed, and very likely that by virtue of all of that happening,